Hello and welcome to this special macroeconomic analysis show. Inflation for the month of September has slowed to the lowest level seen in the last 100 months. Well, that's actually 8 years. At 1.5%, the reading for September is the lowest since July 2017. This number is in line with CNBC-TV18 poll, which was about 1.5%. This is also above the Reserve Bank's stated mandate to keep the CPI inflation between 2 and 6%. The mandate is for 4% plus or minus 2%. When inflation falls below 2%, clearly the Reserve Bank has not kept to its mandate. So what action should we expect from the Reserve Bank? How will the future trajectory of the CPI be? To parse all this, we are joined by a band of economists, Aditi Nayar, the chief economist at ICRA, Madhavi Arora, chief economist at Emkay Global Fin Svcs, Anurag Mittal, head of fixed income at UTI Asset Management, and Debopam Chaudhuri, the economist from Piramal Enterprises. Ladies and gentlemen, it's an even house. Thank you very much for joining me. Madhavi, first up to you. What's the first takeaway from this? It's a really low food inflation number. Should things get even lower in the month of October?
Yes, Latha. So we're looking at October to go as low as 0.5 or even lower than that. The last 15 days, Monday data is not looking ominous. We will have the full GST effect being felt in the month of October. Even if I assume a 70% pass-through of the GST cuts, you would actually see core inflation coming down by more than 100 bips and headline inflation coming down by 60-70 bips. That would be a big, bump down in inflation for the next 1 year or so before the base effect sort of turns ugly for them. So I think next print would be pretty interesting to watch out for, because we'll be looking at CPI inflation actually going below 0.5% for all we know.
Okay. Yes, before this number came, I was getting an average of about 0.7. But as you point out, even this inflation, especially food, has undershot. And therefore, perhaps we should be expecting an even lower than 0.7, maybe a 0.5%. Aditi, your calculation, what are your key takeaways from the current numbers, especially food and core?
Thank you, Latha. Well, we were a little bit higher at 1.8%, so the number has come in, it's been a pleasant surprise, and it's been pulled down by the food disinflation being deeper than expected. Interestingly, when we look at the other subsectors, some have actually shown a sequential uptick as well, including housing and miscellaneous. Miscellaneous, of course, is really getting pulled up by the gold and silver price increase. And that will get countered in the current month by the GST rates coming off. So it should be an interesting month. I think I agree with Madhavi that the print in October is likely to be 0.5% or below that. And then after that, the uptrend should resume, but at, the trajectory will be a little lower than what we would have thought earlier, but it's still going to be an uptrend towards the rest of the year. But ending the year with a relatively benign number. So I think now we're going to have to rework our average.
Full year number.
Full year number should now come in, below the 2.6% that the MPC last indicated. How much lower is what we need to work through after the GST impact, plays out through the numbers.
Okay. Well, for the record, the Reserve Bank's forecast for July, August, September was 1.8. If we now do the math of the last 3 months, 1.6 plus 2.07 plus 1.54, you get an average of 1.7. So already the inflation for July, August, September has undershot the Reserve Bank's forecast. If October is going to be 0.5%, as Aditi and Madhavi are telling us, chances are the 1.8% of October, November, December also could be undershot. Debopam, clearly it is a pleasant surprise for you. I remember your expectation was 1.9. This is a sizably lower number. Do you expect, therefore, that December is a sure short rate cut?
Absolutely, yes. I was a little disappointed when the rate cut didn't come through in the previous meeting. And as you rightly said, if inflation is so consistently below the 2% mark, then RBI needs to do something to pump up demand so that inflation starts to go up. So what is true on the higher side of inflation is also true on the lower side of inflation from the RBI charter. So I do expect the rate cut to go through, by at least a 25 basis point rate cut to go through in December. And I'm also expecting one more rate cut before this fiscal year ends, that is in February. Other thing that I would like to add is whether this low inflationary trend is going to impact consumer behavior, consumer demand any significantly. Prima facie, it may not, because if you look at the CAGR of the last 3 years or even the last 5 years, it turns out to be 4.5%, 5% in terms of inflation growth. Obviously, because of base impact, etc., we are seeing numbers which are so low. So when you physically go to a market to buy stuff, you may not witness prices which are significantly lower as these numbers suggest. And hence your disposable income may not get that additional leg up to do a lot of discretionary spending at the end of the day.
Fair.
But what is also encouraging is the consistent difference between, or consistently the fact that rural inflation has been below the urban inflation since March of this year. This used to be always the case in India. Obviously, this flipped during COVID, and now again from March, this has resumed, which is a good sign, which means going forward, at least urban food inflation will not get additional upward pressures because rural inflation is higher than urban inflation. So this is an important point to note that rural inflation once again is consistently being lower than urban inflation.
Okay. So while rural areas are probably going to suffer negative terms of trade because of the fall in food prices, the advantage for rural consumption hopefully will come because inflation is even lower than urban inflation. Well, the bond yields have fallen by 1 basis point since the number was announced, Anurag, from 6.52 to 6.51. What is the market penciling in for December itself? Can it be a 50 in December itself? Because you will have 2 consecutive months of way below 2% inflation.
Good evening and thanks, Latha. See, the bond market, if you look at from the swaps, is largely pricing in 25 basis rate cut in probably in the next policy. I think one of the other factors also to consider is, compared to the previous policy, even for FY26, still the inflation estimate is about 4.5%. So the space for, I think, 50 basis probably at this point is, I would say, slightly lower, unless and until there's a major exogenous growth shock. We would still assume that probably RBI may cut by 25 basis. And of course, between the current inflation prints and by December policy, if India were to stitch together a trade deal with the US, probably even that probability may go down.
Oh, okay. It looks a little difficult because the governor, or rather the stance clearly indicated by the MPC was that there is space opening up to support growth. There can be a very good debate on whether it should be used up in December or whether it should be used up in February or April. But clearly space opens up even more widely after this number is announced. Madhavi, what is your forecast, full year and next year?
So full year, we're looking at this point in time close to around 2.2% with a downside risk of around 30 pips. So it could be as low as 2% for this year. And for next year, as of now, we're looking at a sub-4 print, which is again much lower than the Reserve Bank. I think it'll be close to around 4.1, 4.2, between 4 to 4.2%, depending on how the pass-through really plays out. So I think the Reserve Bank, while they had downgraded their FY26 forecast for the 4th time since the beginning of the year, I think they still kept some space for a further revision, which probably will happen in the next policy, which could be used as a lever for them to, sort of probably justify a rate cut. Because I think that at 2.6%, they were clearly looking at a further undershoot of at least 40 to 50 bips. And that probably would play out in December, and they would revise it down to close to maybe 2.1, 2.2%.
Yeah. RBI brought down its CPI inflation. The last number we have is, I think, June. The June inflation, right? April, May, June. They had brought it down from 4.9 to 4.5 in the last policy. Now, is it a writing on the wall? They will have to bring it down to probably 4%, you think?
Yes. Because if you look at the MPR also, they kept it close to 4.5% for the whole year for FY27. I think there will be a downshift that will happen owing to GST-led disinflation. Which obviously may not be the only reason why they would cut, because that I don't think would be the demand-driven disinflation that you would see. But nonetheless, there is a case for an undershoot for the Reserve Bank in terms of their inflation forecast. And most likely December will also see further downshift in FY26 and 27 inflation, which will be the fifth time that they're revising on FY26 inflation. So I think that could be probably the time for them to act.
Okay, you're at 2.4 for the full year, or current year.
Actually. As of now, I'll have to see the numbers again, but around 2.2-ish, what I remember is
2.2, okay.
whole year
That's
number.
a far cry from where the Reserve Bank began, which was, I think, at 3.7. So are you going with a rate cut in December, 25?
We've been saying that the Reserve Bank had been unwantedly focusing on 1 year at inflation when they're actually going wrong in getting their next month's or next quarter's inflation right. And it is very misplacing on their part to actually put a lot of faith on 1 year at inflation. And I think, there would be a fair reason for them to actually act in the next policy. So we are expecting them to, probably cut in December and beyond, depending on how the tariff effects actually evolve.
Well, actually, President Trump is speaking at the Israeli parliament, the Knesset, and probably something important will come from there. Let me quickly get your views on the next policy and your full-year inflation print. Aditi?
Latha, I am going to say something a little bit different. My full year print, I will rework after seeing the pass-through of GST. It will definitely be 2.5% or less. But how much the GST pass-through happens and how quickly will, affect that.
Yeah.
On the rate cut, the space is certainly open. There is a possibility that we will get a rate cut in December.
A little rapidly, okay.
At the point that GST rate rationalization-led fall in inflation is coming with higher demand, not with lower demand. So it's not necessarily, should not...
Oh, is there a cut or not? I have to wrap it quickly, I'm sorry. Is there a rate cut in December?
No, yes.
So far, yes. Okay. Debopam, you are going with the rate cut in December.
Absolutely.
And your full year
What I
number,
think.
full year inflation would be for this year?
So far, it's still 2.6%. I am a little concerned about food inflation picking up because of untimely rainfall in the eastern parts of the country, which is the rice-producing belt.
Okay.
So
At the moment,
if
cereal prices are absolutely flat month to month and pulses are down 15% on the year. So at the moment, food inflation is not looking very difficult. We'll have to wait and see. Finally, Anurag, the market is only prepared for one more cut, you're saying?
Yes.
Okay.
As of now, that's our case.
It's not penciling in anything in February or next year?
Not right now.
Not right now. All right. We will have to leave it at that and, cut to the Israeli Knesset where the president is speaking. Thank you very much, Aditi, Madhavi, Anurag and Debopam for speaking with us. Expectations are there'll be a drastic cut in inflation forecast and a rate cut in December. Over to President Trump.